Hilda, wapi makofi? Give a round of applause jamani. Munafanya Kiingereza inapotea, mnakaa mumenyamaza sana. Give a round of applause jamani. Yes, welcome, welcome. From Bitika, we have Kimberly Sandra. And of course, the list is not complete. I'll allow Sandra to introduce, I think, one or two more panelists. Is it so?
Hello, everyone. Excuse me. Okay, good afternoon, everyone, and welcome to Rethinking Virtual Asset Regulation in Africa. For years, the conversation has been around virtual assets, around the builders, innovators, and early adopters. But today, the conversation is increasingly um, tilting towards regulators, governance structures, and frameworks. So the question is no longer whether virtual assets matter, but how they should be governed and whether the frameworks emerging today across Africa are fit for purpose. This question is particularly important for Africa because our realities are different. We have unique challenges, and the value propositions of the technology are quite distinct for us as Africans across elsewhere in the world, right? So as we begin this conversation, I'd like us to think beyond simply regulating technology and ask whether we are asking the right questions in the first place. What assumptions about money, payments, and financial inclusion should policymakers challenge? What would a virtual assets framework designed specifically for African markets look like? How should policy respond to the fact that many Africans virtual assets because are turning to virtual assets because traditional systems do not adequately serve their needs? So to help us unpack these questions, I would move to our excellent panels with expertise spanning regulations, industry, and industry. So let's begin with you, Kimberly. Just tell us briefly about yourself and your expertise within the space.
So, my name is Sandra Kimberly. I am the co founder of Bitika. I am also leading policy and regulations within the Bitcoin community in Kenya. So, basically, I'm helping the Bitcoin ecosystem in Kenya and recently across Africa to understand policy, to understand the regulations that are coming up so that we can be able to navigate it better, basically. Yeah.
All right, thank you. Next up.
Hello, my name is Hilda Rita Mugasia. I'm a lawyer practicing in finance. My core interest is, of course, financial technology and financial innovation and how it ties to other tenets of society, such as human rights, sovereignty, and very many other factors. So I have predominantly worked in the policy space. Policy lobbying has been my cup of cake for a while, but I also work in the corporate commercial space. I also work in the corporate commercial space as a lawyer. Yeah.
Afternoon. My name is Trevor. I'm the CEO and founder of Alpha Block. And I've been in the financial services space for about 15 years, focusing on products around lending, payments, remittances, savings, and investments. And I sit also as a vice chairman of the Anvil Shield Group, which holds businesses in those industries. And the objective actually is to create a financial services network that can protect mankind from the disruptions that are coming from AI.
All right. And lastly, there's me, Imam Shim. I'm a lawyer and digital assets policy and regulatory intelligence professional working with the Africa Bitcoin Institute. So let's get right into it. So Kimberly, I will start with you. What assumptions about money, payments, and financial inclusion should we challenge when creating policies for virtual assets?
Yeah. So before I answer the question, how many here feel included in the financial system? If you feel included in the financial, just raise your hand. If you feel like you are included in the financial system, how many feel they are not included in the financial system? Yeah. So there are more hands about that. So ideally, when we speak about financial inclusion, it's not just about access. Like, oh, you have an access to a bank account, or you have access to your M-Pesa. Financial inclusion is you have the opportunity to decide the value of your finances, basically. So if you have access to a bank, but you're not the one who decides the value of what you store in that bank, then you're not included in the financial system. So to answer the question, basically, there's a lot of assumption that everyone is part of the financial system, and the reality is that we're not, because there's someone who decides how much something is going to be worth for over a period of time. So when we're designing policy also in the same space, we're not looking into why are these people actually looking for a different way to go about finance. So we have guys deciding, okay, I'm getting into Bitcoin, but most of the policy makers are not looking at the problem. Why did people decide to go into Bitcoin and other forms of digital assets? That is because they were not included. I can store money in my bank for a year. I'm saving. Nominal value increases, but my purchasing power reduces by the minute. People usually say 1,000 bob 2 years ago, that's like $10 could have gotten you like a full shopping cart. But right now, 1,000 shillings is what we pay for Uber to come here to the conference. So you see, as much as the nominal value of the normal fiat is increasing, the purchasing power continues to reduce. So that is a very high assumption that a lot of policymakers have. They're like, everyone is included, everyone has access, but they don't see, if you have access to something but you cannot decide or determine what the access actually gives you, then you're not included. And even in the policies that we make up are blind to that fact that these guys, yes, they do have bank accounts, yes, they're able to get M-Pesa, but the value of what they're storing or what they're moving in terms of assets is still not working out for them. Yeah.
Very interesting. So that takes us to the next question. Our challenges as Africans and opportunities are not always the same. So if you're designing policy from first principles rather than importing existing models, what might that look like? So I'll turn to you, Hilda. What would an ideal virtual asset policy design specifically for African markets look like rather than one borrowed externally?
So, with regard to that, we look at what we have now and where we are going. Of course, as Trevor has mentioned, we have a very evolving financial system. Even as a society, we are moving more and more towards globalization. And in the African context, I wish, let's call it Africanization. So, right now, when you talk about currency, you're not just singling out Kenya, you're looking at Africa as a whole. So, we're going to ask ourselves, how can we, for example, strengthen trade across African countries without dollar dependency? We're going to ask ourselves, how do we ensure that we get sovereignty in determining most of financial policies in Kenya, and of course, that's specific to Kenya, but in Africa in general, because as you know, even your finance bill, even the virtual asset bill, most of the provisions, yes, are developed by our regulators, but there is heavy external influence. So we have to take into fact the sovereignty or the lack of sovereignty in our policies, in our monetary policies. We have to take into consideration the future of trade within Africa. We have to take into consideration better ways to peg our currencies and reserve currencies. We have to take into consideration the fact that we have an enterprising and very aware class of youth that are actively participating in policy development and shaping their communities. And finance and currency is a huge part of that. So if we're going to get a policy that is imagined for our context, we have to pay attention to our realities. Number one, We have more mobile money penetration. We have very limited power in defining the policies that affect the strengths of our currencies, as Kimberly had pointed out. We are moving more and more towards trade within the African continent. I'm sure anyone who's gone through any talks on import exports, Africa can sustain itself intra-country. So how do we ensure that our transactions are not being routed outside, but we can handle them within? So those questions even become now social, and it becomes more of a movement than just the currency itself. Yeah.
Thank you so much, Hilda. So moving on, third question is whether policy should begin with the technology or the realities driving adoption. And I'll come back to you, Kimberly. Many Africans use digital assets because traditional financial systems don't meet their needs. How should policy account for this reality? And secondly, do you think the policy frameworks emerging are addressing our unique challenges?
Yeah, so just to like pick on what I said earlier, first, policy makers need to ask themselves, why are people using these technologies in the first place? Once they're able to answer that, then the policy design will be much easier because you're approaching it from a point of public policy is policy for the people and by the people. So when people decided to move into digital assets, why did they decide to actually use that? It's because the traditional financial system did not work out for them. And as I keep on saying, financial access is not inclusion. It is not inclusion at any given point. You have access, but you're not included in the decision making that is happening. So a lot of policymakers keep on focusing on the risks. We're doing risk-based policy instead of doing a more progressive way of doing policy. So like right now with the current Virtual Asset Service Providers Act, it talks about the risk approach, consumer protection, scams, anti-money laundering, anti-terrorism financing. But when you go through that document, there's no point where the regulators are saying how they're going to promote the innovation within the space. So ideally, we're doing a risk-based analysis where it's like, because something is bad, it is bad. And you're like, I want to approach this thing from the bad side of it, but not the good side of it. I mean, how many people here have startups within the Bitcoin ecosystem? I have a startup who else has something they're building, an education platform or something. We are all building good things within the ecosystem. So when regulators come and make this whole thing about the risk side of it, like they're looking at us and seeing we are financing terrorism, basically. The regulators are looking at us and seeing you want to scam our citizens. The regulators are looking at us and seeing you're moving money across borders and that is illegal money. But they're not seeing the opportunity that this ecosystem is giving. This ecosystem has employed a lot of young people. Like Bitrust today did a very good presentation on how they're empowering developers. Every year, people are graduating. Computer science, software engineering, and the job market, there's no proper transition to the job market. Bitrust is here to help young people contribute to the open source of Bitcoin development. And that is something that is keeping them busy. They're contributing to a technology. But regulators are not seeing that. They're seeing these kids are contributing to a technology that is financing terrorism. And that is something that we need to, again, I do not like saying it without also talking to ourselves and say, we also need to let regulators know what we are doing. A lot of our conferences are just full of money moving from point A to point B. But now this conference, as you, all rooms are discussing different things. Like right now, you see, we're discussing on policy. And earlier on, we had people presenting on what they're contributing to the open source. So regulators and policymakers need to see more of us talking about what we're doing outside from moving money from point A to point B. Bitcoin is no longer a speculative asset. It is a technology that is moving, that is growing, that is giving jobs, that is allowing people to save, that is allowing people to have freedom. So the moment we just let regulators look at our technology like a money laundering tool and terrorism financing and cross-border movement of money, then the regulations and the policy will not favor us. So we have to wake up as a community, as an industry, to show the policymakers and the regulators what exactly happens within the Bitcoin ecosystem.
I agree with you. Excellently. So just a follow-up question. You made the point that regulations are from a risk-based approach, and one of the reasons is obviously because we haven't engaged regulators, right, as a community or even an industry. So my next question is for Hilda. Do you think at this point in time, the Bitcoin community is doing a great job in engaging regulators and policymakers, right? And even so, to what extent?
So I personally do not think the community is doing enough. When we started policy lobbying way earlier on in 2024, 2023, you have to sit them down and explain to them how you are different from the financial system. Education is a huge part of lobbying. So yes, we may expect much of them, and we'll say as a government you're supposed to do this and this and this, but on our end, it is also our duty to educate. Number one, so have closed door sessions, engaging regulators, as Kimberly had said, but also publish proper policy and research papers on what is going on in the Bitcoin space. So, for example, if Kenya is facing a sovereignty issue with debt, a sovereignty issue with financial policy, you can benchmark from other jurisdictions that have used Bitcoin to solve this particular problem, write papers on it, make presentations on it, have proper discussions on it. If you are talking about employment, for example, do proper statistics on it, publish the papers, engage regulators that are interested. And trust me, there are many that are interested, even few. You don't need many, actually. And I actually want to comment Kimberly. She does papers on currency and how it is being devalued even as compared to Bitcoin. So such allows us to move on. But again, as I'll say, you have to remember that yes, we talk to these regulators, but they too lack sovereignty. So it has to be a social movement just as much as it is a technological and financial movement.
Thank you. Okay. And just to add, the risk of not engaging regulators as an industry is that we'll continue seeing hostile policy, or hostile policies will continue to harden, right? We've already witnessed one from Kenya, the Kenya VSP 2025. Although, it's very all inclusive, but the capital thresholds sort of it risks taking out the small players out of the ecosystem. Then you move to South Africa, right? What you're currently witnessing with the capital markets regulations is the fact, or is the lack of regulatory engagement. So that's what happens when you don't engage your regulators and policymakers, right? They would only classify these digital assets as it suits them. Like I would always say in policy parlance, if you're not on the menu, or if you're not on the table, right, you are on the menu. So it is about time we organize ourselves as an industry and engage our regulators. Moving on, Trevor.
Can I add to that?
Of course.
There's a phrase that power is not given, it is taken by force. So you definitely have to be extremely proactive in how you're acquiring power, in how you're pushing the narrative. Remember, we are also future looking, or our regulators are future looking. So let's also appeal to that. As Trevor had said, if you're going to talk about agentic infrastructure, what better way to create a financial infrastructure for autonomous agents than Bitcoin? So now appealing to that sort of future value that the government has, or the future, what they're trying to achieve in the future, that will also help us to sort of move ahead with policy that is inclusive of Bitcoin. Also, just learning how different Bitcoin is from normal financial infrastructure. Sorry to say this, but for stable coins, it is well understood. They can be grounded in money remittance laws, for example, if you're doing cross border payments. But for Bitcoin, it's extremely different. So you have to understand what we have, what your value proposition is, and how you are fitting or not into the current system, and how you can advocate for your space there. Yeah.
And lastly, on stablecoins, right? The political class understand how the technology works for them. For Bitcoin, I think we keep coming from an economic sovereignty outlook, which does not really, you know, will I say gel with them, doesn't stick to their political conscience. So, when we engage them, we should do well to, use or ease the language and explain to them how the technology works for them. Because policy advances on appetite, right? It needs appetite for it to advance. You wouldn't go to, I wouldn't want to mention any country, but like, let's just say a hostile nation, for instance, right? A country that is hostile to, let's say, political activists or human rights defenders. And then you're telling them about Bitcoin, how Bitcoin bypasses their traditional financial system. So I think it's time to bring Trevor in. Is it possible to create a policy framework that protects consumers without making compliance so expensive that startups cannot participate?
It wasn't before, but now it's possible because of the blockchain. So the blockchain is actually a coordination technology. It allows for different pieces of information that are on the internet to operate in a way that can be verified. That's also the role of a regulator. A regulator wants to know what are you doing? Are you doing it within the rules that we have set? And how does that affect the people that you're serving? The blockchain can do that. The only challenge you have is naturally, frontier technology is developed and distributed by startups. And then after 10 years is when now the larger, less technically savvy institutions adopt or understand. So we have a way that you can say, I just need to create a way to see and verify what these startups are doing. That's actually it. Put that on the blockchain. Allow for regulators to have a way to review whether something was done in the right way or in the wrong way. So when you're using the blockchain to achieve that, it means you don't have to have physical individuals going to come into your office once a year to do an audit, because the blockchain is the tool you use for audit. You don't have to have individuals that come and assess the industry's infrastructure with deep, budgets, like calling, what do you call these companies? The big five, to come and audit how banks are operating, how all these institutions are operating, because now you can do it at the touch of a button using the blockchain. The only challenge is ensuring that the regulator trusts that this information is correct. And that's what the blockchain does. So the reason why regulators make it expensive is because there's no way they can come and visit 100,000 businesses. But if you don't need to visit 100,000 businesses, because now you have the technology that can give you the information around how those businesses are operating at the touch of a button. So that's why even like the 50 million core capital, it's 50 million core capital for startups. That's extremely expensive. That's like a bank. That's basically saying, if you're a startup, forget about it. If you're a bank,
Then it's for advisors.
it's for advisors.
50.
It's 150 million. Yeah. The reason they're doing that is because they know if you raise it, there's less people to audit and you'll be able to save your career. Reduce it, but put everyone on the blockchain. And hence, no one can be able to do something that's outside of the regulatory scope. So it requires the regulator to really work very closely with the private sector to ensure that they can adapt or close the gap of knowledge and know-how to be able to apply that.
Thank you so much, Trevor. And just to add, I always say it's policy does not advance on truth alone. I mean, what you have said is really coherent, it's the truth, but until we engage with them and make them understand how this works for them, right, then we are not going to advance from where we are. So, lastly, this is a question for all the panelists. I like to, what is one policy approach currently being discussed or has been implemented that you believe will age poorly over the next 5 years, and why? I'll start with you, Trevor.
For me, it's just how we think about Bitcoin as an asset, and the fact that we don't understand that the potential of Bitcoin being a unifying asset and tool. So we look at Bitcoin as a speculative asset and we say, yes, you can buy, you can hold, you'll get taxed on it, get taxed on your transactions. And yet the structure that Bitcoin allows for nations, it allows for nations to, especially African nations, to be able to use it in a way that avoids the need of being stuck on the dollar. So it's actually the one tool that exists today that can unify the whole of Africa into one African economic zone. But the way we've structured our regulations will not allow that, because it still requires you to make cross-border payments in a way that treats the local transaction and the local transaction on the other side as separate transactions or separate assets in different jurisdictions. So if your taxes are different in Nigeria and your taxes are different in Kenya, it makes it difficult to create a unified layer for trade. And yet Bitcoin can achieve that. The continents that achieve that first will be the continents that reduce the trade barriers the fastest.
Thank you, Trevor.
For me, it's the rigidity in the policies. This is a very new space and a lot of innovation is yet to come. So if we start with this kind of rigidity, it will be extremely hard to create room for growth and space to kind of be trailblazers in the space. So as we had said, this is just the onset of the infrastructure. Let's push for more sandboxes to understand the policy. So yes, technology sandboxes, let's have policy sandboxes, let's have financial and economic sandboxes. And again, it is our role as the community to push for this just as much as it is our government's role. We do have leaders, yes, but they are not as savvy as we are. And yes, it is their role, but even as citizens, let's work towards pushing for better policies and for room for us to grow and have the discussions that push us forward.
For me, it's one size fits all. I have been in policy long enough to attest that the one size fits all way of doing regulations has never worked in all the industries, because what we're doing is we are copy pasting, like the Virtual Asset Service Providers Act in Kenya is copy pasted from the European one. Copy paste. And literally, we are in a different border where like Europe is over there. To go to Europe, you need visa. And visa process are very undignifying. Anyone who has tried to get a visa, you know. So, hey, my God, you are there. They will ask you for I don't know how many documents. You will go, you will come back, and only for them to tell you no, you're not coming. So now, if getting access to their country as us is very difficult, how are we benchmarking their policies to suit Africans and to suit Kenyans? It makes absolutely no sense. We have different financial realities. Our financial access is different to theirs. They have a lot of things that are so different from ours. So the copy pasting one size fits all for regulations, I like to call it lazy policy making. Like, you're just lazy. You don't want to do the research. You don't want to do the work. You don't want to engage with the public properly. You just thought about this technology and you want to copy paste and say, now we're regulating it. And as you can see, when this one size fits all is coming into place, now what we're doing is we're now closing out innovation. Because if I have a startup and I need 150 million Kenyan shillings to just set up a startup, that's like a bank I'm setting up. If I need to do reporting, like I have a startup and I'm doing reporting for like an exchange that does like 100 million transaction processes a week, and my transactions are like $1,000. Why am I being regulated the same? It's because our policy makers have become lazy, but then also us as an industry, we are also very lazy. We're not going to their rooms. We are like, it's us versus them. There was a presentation, Noelin said, it's not us versus the regulators. At any given point, Bitcoin is a decentralized technology in a centralized system in centralized countries. So at no given point will we leave this decentralized delusion and run away with it. At some point, we will have to centralize ourselves to engage with the centralized entities that are meant to regulate us. Yeah.
All right. For me, simply, it's any policy that sought to stay ahead of innovation, right? Then I don't believe it's going to be around for the next 5 years. I strongly believe policies should follow innovation and not stay ahead of it. Because Obiwosu said something at the Oslo Freedom Forum that stuck with me. It's you choose to stay regulated or you choose not to. I mean, the technology in itself permits us to stay unregulated, right? So that's a choice. So if you're introducing policies that seeks to, capture the market, you want to be inclusive, you want to be ahead of the markets and set the pace, right? You should do it at the point or at the pace whereby innovators don't seek to take the approach whereby they can choose to remain unregulated. Because, like I said, the technology in itself permits us to stay unregulated, to stay outside of the formal financial infrastructure. So that's just my take. So thank you, everyone. Thank you for joining us. That'll be the end of our session. Bye.